Every buyer wants to know what the super secret program that can help them buy a home is. I get the question all the time. Well, I'm a first-time home buyer. Isn't there something special for me, or a teacher or military? And the short answer is yes, there are programs. Different lenders include different benefits, and banks have different offers. Different lender offices participate in different programs. So, this is why it's important for you to find the best lender that's right for your needs. That's the biggest thing, is to find the one that matches what you want and can get out of it. Even though rates should be close with all of them, sometimes the programs are different. They don't have to all participate in the same availability options for buyers. But most of the time, it doesn't matter anyways in California. You see, a lot of the time, there's an income threshold or a household minimum requirement, maximum requirement that have caps on them. So the lines start to blur in between the home that you want and the amount of income you need to prove to make that home happen and get approved for it. And these programs, a lot of times, to show that you make the income for the home that you want, it actually means that you make more than what these specialty programs offer. So what does this mean? It means you should speak to different lenders to see what works best for you. Everyone's conversation will be different. It's very important that you speak to them. If you want, you can message me and I'll put you in touch at a no obligation phone call, and we can get you in touch with some local experts, different ones, so that you can see the different programs they have to offer. It also means that in general, there are some basic concepts that apply to everyone. One of which being that not always in the best interest for you to use these programs. Sellers typically choose offers in the order of cash, conventional, FHA, and then specialized programs because of the hoops that they'll have to jump through with these programs. I wouldn't worry about this, since at the end of the day, you're going to choose the program that is the best option that works for you, but it's still good to know the different options that are available to you, because you may be able to pivot between one or two of them that might make sense and change depending on the house that you're going for and the seller's interests. Also, sometimes I have people asking, hey, let me use the FHA first-time homebuyers program. And yes, it may be their first time buying a home, but that doesn't mean that that's the right program for them. Choosing between FHA loans and conventional loans for a first-time homebuyer depends on several factors, including your financial situation, your credit score, your down payment capability, your long-term goals. So basically, I'm here just to, give you a little bit of a comparison, help you understand why you might want to choose an FHA loan over, let's say, a conventional loan, or vice versa. Before we go into those, though, it's important to note that I am not a lender, and that I do advise that you speak to a lender about your personal situation, as it is different for everyone. Or you can reach out to me and I will put you in touch with one that I work with daily. I am a licensed realtor in California, and I'm speaking from my own personal experience, having bought multiple homes at this point, investments, and working with lenders daily to help other people buy their homes. I really like going in for the fight for the buyers and negotiating the best deal possible. And I haven't had a transaction yet where I wasn't able to provide massive savings and benefits to the buyer. So let's get into it. Reasons to use an FHA loan. Lower credit score requirements. FHA loans are more accessible to borrowers with lower credit scores. While conventional loans typically require credit scores of 620 or higher, roughly, speak to your lender on this, FHA loans can be obtained with a score as low as 580 or even lower if you offer higher down payment in order to reach that, depending on what the underwriter needs. So if you have a smaller down payment, FHA loans will allow for a down payment as low as 3 to 3.5%. I believe it's about 3.5%. Speak to your lender again on that, of the purchase price, making this an attractive option for individuals who have not saved up a large down payment. I'll say that again in layman's terms. FHA loans are typically for those who are not sitting on a lot of liquid cash. Therefore, they are required to put less down. The more lenient debt ratios for FHAs, they tend to be more forgiving in regards to debt to income ratios, potentially allowing borrowers to qualify for a home when they might not meet stricter requirements of conventional loans. You can get assumable loans. FHA loans can be assumed, meaning that the future buyer could take over your existing loan with existing terms, potentially making your home more attractive if interest rates rise in the future. Hello, hello, have you met 2024? Reasons to choose a conventional loan over FHA loan. Basically, the private mortgage insurance, also called PMI, you might have heard, can be removed. Conventional loans allow the removal of PMI once the loan to value ratio reaches about 78%, 80%, kind of in that realms right there. Speak to your lender again on that. Whereas FHA loans require mortgage insurance premiums, MIPs, for the life of the loan. So if you are going to make a payment of less than 10%, it may not matter. But if you're putting on a down payment of, like, let's say 20%, then conventional will allow you to remove the PMI. Lower overall costs for some borrowers, good credit scores. Conventional loans might offer a lower interest rate and PMIs, saving you a significant amount of money over the course of the loan. There's higher loan limits typically. Conventional loans offer higher loan limits than FHAs, which is a crucial factor when you're looking at a higher cost area. There's no property restrictions. FHA loans have strict property standards that the home must meet, which can limit your options or require significant repairs before closing. Conventional loans are generally more flexible with property conditions. This is why I was saying, from a seller's perspective, they may consider a conventional loan over an FHA because it's less repairs that they're going to be required to do in order to make the deal close, potentially. Investments in second homes. FHA loans are limited to primary residences, whereas conventional loans can be used to purchase investment properties or second homes. So basically, in conclusion, ultimately the choice between an FHA and conventional loan for a first-time home buyer hinges on their own personal circumstances, which is why it's important for you to reach out and for me to put you with a lender. An FHA loan might be the way to go if you have a lower credit score, a smaller down payment, or a higher debt to income ratio with your credit cards or car payments. However, if you have a strong credit profile and you can afford a larger down payment, the conventional loan might offer more flexibility for longer term, lower cost situations. It's essential for you to compare both options, in my opinion. Carefully consider options and carefully consider consulting with a mortgage professional to determine which one best suits your financial situation and home ownership goals. If you want to reach me, my name is Jacob Kutsch. I'm a licensed realtor out of the Central Valley of California. Phone number is 559-367-5027 with the Keller Williams office. Each office is independently owned and operated, and see the details below for licensing and information. I hope this helps you out, and don't forget to be a game changer.